Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Friday the 26th of May 2017. I hope you're well, hope you've had a good week, and I just want to point your attention again to the dollar CAD. Highlighted this as an area maybe last week, something like that, I think it was, where I thought there would be a level of demand. It has bounced off that, but we'll get there and get to that in just a second. What I wanted to highlight prior to that is this level here. So part of understanding traps is understanding the behavior of other traders, other market participants, so that you can realize where they are taking trades. So it becomes easy to see where they are on a chart. If you can see them, then you can see where they're in trouble as well, right? So deconstructing one very simple and commonly used form of technical analysis is the old Fibonacci retracement tool. And Fibonacci is even held in higher regard to those types of traders when it lines up with other things. So specifically, some type of prior level of resistance becomes new support, etc. So you got a level here that's resistance, breaks up through the level, and lo and behold becomes support, right? Several touches and then boom, away she goes, puts in a new high and comes all the way back to the fabled golden excuse me, golden ratio, right? The 61.8%. Now look how price reacted off that level. Bear in mind it's coinciding with that prior level as well, as we've just marked up, right? So this is like Fibonacci gold to those types of traders. Now, although there will be people out there who, once they see the market reach a level where they're interested in doing business, most people, and they'll just place an order, most people will actually wait and see if there's any type of reaction off the level. Few people place orders and just like sort of accept that that's where price is going to turn without sort of having a look first just to see, because any trader that's done that for any length of time knows for certain that there'll be days when you place that order and you just get zapped. And if you'd have just used a little bit more common sense, then you wouldn't have been zapped. You could have just waited and seen that the price was just going to cream through the level. So most people get a little bit beyond that. And they look to see if there's some type of reaction. Now, if you looked at this price action, you have price put in a new high, pulls back into that prior level, and boom, what do we have? Right? The engulfing candle. Where's Steve Nissen when you need him? So everybody goes long, right? This is where people start buying, piling, and not only does that behavior become obvious, the behavior of where they would likely place some type of protection for a stop also becomes obvious. This would be a typical placement, or maybe below that level, a typical placement of a stop protection in case the trade goes wrong, right? So that's what people would do. So as price develops, people are like, yay, this is working, this is fantastic, and they make a little bit of money, and more traders obviously pile into the trade, right? Maybe some momentum, maybe some microstructure type retracement traders pile in, and then boom, oh dear, how's that Fibonacci retracement working out for you now? Right? They've been creamed. Where were the stops, right? Where we mentioned just under that level. I'll redraw them just so we can see that everybody pretty much got creamed. Doesn't matter where they pretty much put them. This goes deeper than that as well, but just to kind of make the point. And they all get zapped. Now then, what is that? That is a stop hunt. That is a stop hunt, the fabled stop hunt. So traders got stopped out buying at that level, and the orders that have been creamed at the level are sell orders. Now, if you're going to do some big buying, if you believe that was indeed going to follow through ultimately, it would be nice, would it not, if you could do your buying in the face of some forced selling, and the forced selling comes in by way of those stop losses, because traders didn't want those orders to be forced upon them. They didn't want to lose, but nevertheless that's what happened. And as price goes down through the level, something, we'll just call it something big, right? An institution, obviously, it's beyond one, but it's easy just to think of it in those terms, forces price down through the level, triggers those stops, and allows them to do business and start buying it up. And that's why whenever you're in a situation where you've picked this trade out, you've looked at it, it's aesthetically beautiful, you think, yeah, this is it, you take the trade, everything looks golden, you get your engulfing candle, you pull the trigger, you place your stop, nails you, and then lo and behold, in the next few days and weeks, price is up in here somewhere without you on board. You were right, it's just you were obvious. And that's the problem that most traders face, is the fact that your moves are real obvious. The reality is, and I don't care what type of trading strategy you use, you are essentially using very obvious principles that are easy to see and easy to understand, and that means that your moves, your work, is clear for anyone to see it, by the trained eye, if you like. Because it's only one of three core major disciplines, and those are retracement trading is one of them, right? Breakout trading, retracement trading, level trading. These are all encompassing. It doesn't matter what type of strategy you use. There are obviously infinite numbers of those, but the core principles behind the strategies that you employ are very, very obvious. And what that means is that your stop loss placements become very obvious as well. So this is in a retracement. There's many different ways it can present itself, and how stop hunts aren't simply just like one sort of way that they don't present themselves in one way. There's many different types of ways and variations, and some can be quite complex. Irrespective of that, though, where these stops get placed are obvious, and that allows bigger traders to use that volume to basically do their trading, because they'll sell in the face of buying, and they'll buy in the face of selling. And where these little pockets of stop losses are dotted all over the charts, they can force price up and through and below, down through these levels, trigger those stops, and allow them to do business in those areas. In many ways, you just become cannon fodder for that. So that's sort of the rationale behind it, and you need to realise that your moves are seriously obvious. But I can help you understand how to make yourself not obvious, and how to trade with those people instead of against them. So in the case of this dollar CAD, you maybe could have got in that area there. I didn't manage it. I wasn't exactly in front of my screens when it occurred. So what I'd want to see now is I'd want to see this move fail. I'd want to see something akin to this occurring, and it can go below that prior level. It's doubtful that it would if it's going to work, but initially, but that wouldn't be too bad if it just went slightly lower and then above. But I want to see this trap those shorts into that level. The Fibonacci people have already been creamed, right? They're gone, they've been nailed. So there's been some buying there. The question is, I need to see a little bit more confirmation, because what you don't want to do, obviously, is at the moment structurally this is perfect. Even the stop hunt aside, it's perfect. It could just do that, and obviously we don't want to do that. So we want some type of trap to occur in here. But then if you do get what I've just described, then this looks pretty good for a trade to the upside. Just make sure oil continues to sell off. The dollar index is interesting. The dollar index looks as if it's potentially reversing. So the negative sentiment has stalled in the dollar. That's good news. If it does turn there, it would be great, and it also makes a lot of sense as we're going into The month of June, goodness, where's the year gone? As the Fed is considered highly likely to raise interest rates again. So just, the weakness in the dollar is really, if the currency markets or any market, they're always looking into the future. And if you look a little bit in the future, you recognize that these things are on the horizon, and cheap dollars, as it currently is, pretty much across the board, is a good thing, as those interest rates increase, and you'll get yourself hopefully into some good, solid, fundamental, long dollar trades. So if you'd like to come and join me in my brand new inner circle to learn how to analyze the markets in this way, come and join me. Click the link below. I'd love to see you on the inside. Take care.